This Spotlight on Life Insurance is sponsored by Creative Marketing, making a difference in your business. For more information, please visit creativemarketing.net. The amount of money life insurers withheld from beneficiaries more than doubled in the last 10 years, according to a recent report published in the Los Angeles Times. Using data compiled by the National Association of Insurance Commissioners, the Times said the amount of money withheld from beneficiaries reached $372 million last year. Insurers will deny claims for various legitimate reasons, including unpaid premiums, fraud, or suicide, but the Times found the number one reason for life insurance claim disputes last year was material misrepresentation. Material misrepresentation is the failure to disclose information to the insurer that the insurer considers important when determining risk. Life insurers disputed 1/3 of claims last year, citing this reason, and it allows them to revoke coverage. Most states have limitations on policy rescissions, but in many states, such as California, rescissions are allowed for 2 years after a policy is signed. Consumer advocates argue that insurers use this period to find flaws in claims that could and should have been discovered before issuing the policy. Insurers say the ability to rescind policies is essential, especially in cases where inaccurate information was provided. Employees who are currently single or have never married are much less likely to have life insurance and disability insurance, according to a recent national survey commissioned by Colonial Life and Accident Insurance Company. Just 39% of single and never married employees currently have life insurance, compared with 61% of all employees. Yet 74% of single and never married employees who have life insurance rate it as important, very important, or extremely important to them in 5 years. Meanwhile, 26% of single and never married employees have disability insurance versus 42% of all employees. 71% of single and never married employees with disability insurance rated it as important, very important, or extremely important to them in 5 years. According to Randy Horn, President and CEO of Colonial Life, the survey highlights the increased financial risk facing many single and never married employees. Quote, "Although most single employees don't have anyone depending on them financially, they still need life insurance to help pay for final expenses and any outstanding debt, such as credit cards or mortgages. And single employees place themselves at considerable financial risk if they're not insuring their income with disability insurance. If an illness or injury caused them to be unable to work, they couldn't pay their everyday living expenses for long and don't have a spouse to rely on for help." Unquote. Horn noted that most companies are currently offering open enrollment for benefits, providing a perfect opportunity for employees to reconsider their needs. He also emphasized the importance of benefits education and counseling for employees. Several insurance industry groups recently urged Congress to consider the important role that life and annuity products play in the financial security of Americans. In a letter addressed to all members of Congress, the group said that reducing tax incentives that currently encourage Americans to purchase life insurance would have disastrous results. The letter stated, quote, "We strongly support the goal of addressing the national deficit. At the same time, we believe it is essential that public policy recognize that more than 75 million American families rely on life insurers' products." Unquote. Groups lending their signature to the letter included the Association for Advanced Life Underwriting, the American Council of Life Insurers, the National Association of Insurance and Financial Advisors, and the National Association of Independent Life Brokerage Agencies. The letter is in response to a recent draft report by the National Commission on Fiscal Responsibility and Reform that includes proposals to increase the Social Security age, change mortgage tax deduction regulation, remove tax breaks for employers that contribute to 401k plans, tax employer expenditures on health insurance plans, and include cafeteria plans in tax rules that currently apply to 401k plans. Also included is a proposal to uncap the disability insurance section of FICA taxes, which is now set at 1.8% of FICA. For more industry spotlights, visit producersweb.com.